Hi Masters Advanced Accounting. In this video we are going to go over how to figure out the equity method of accounting. Remember, the equity method is 20 to 50%. Consolidation is 50 to 100. Let me go back to the beginning. The cost or fair market value method is 0 to 20. All right, so here's the problem. I don't normally make videos for problems that are this small. However, this is a tricky problem. All right, let me tell you why it's tricky. On January 1st, Belleville Company paid $2,295,000 to acquire 90,000 shares of Fallon's voting common stock. Okay, right there it tells me the number of shares they owned. Okay, which represents a 30% investment. Well, that's the equity method. No allocation to goodwill or other specific accounts were made. Significant influence over Fallon is achieved by this acquisition. Definitely the equity method. And so Belleville applies the equity method. O'Fallon declared a $1 per share dividend during the year and reported net income of $750,000. I'm going to go back to that $1 per share in a minute. What is the balance in the investment account? So this particular problem is only looking for the balance of the investment account. All right, so we'll first put in, here's the base. You've got the beginning balance. You're going to add the percentage of the net income. You would normally take a percentage of dividends. However, this one's tricky. And then you're going to end the final balance in the investment account. Oops, let me erase that. That was another video I did. All right. And I'll also show you how you figure out using a T account as well. All right, so let's start with the acquisition price. The acquisition price, our beginning balance, is $2,295,000. Remember, the investment account is an asset. That will be on my debit side, $2,295,000. I look back in the problem. What else did they tell me? They told me that the company earned a net income of $750,000. They only own 30%. Take $750,000 and multiply it by 30%. So that we will add, it's $225,000. Not $750,000, $225,000, and I will debit that. Okay, this is tricky. All right, so here's what it says. Normally you would take the dividends and multiply it by percentage, but they didn't give you the total dividend. They told you what O'Fallon declared, $1 per share. You're going to go back to the 90,000 and multiply it by $1. Okay, because you own 90,000 shares, so you don't have to multiply it by a percentage. You will take the 90,000, multiply it by $1, and that will give you 90,000. They didn't give you the total amount, so you're going to take that 90,000. Don't have to multiply it by a percentage in this case. Most of them, yes, you do. All right, so they made this one a little tricky. 90,000. Okay, remember dividends, you will always subtract. So let me show that in parentheses, show that as a credit. The investment account is an asset. And when you do, and you figure out all these balances, the final balance will be $2,430,000 if you do the base, and $2,430,000 if you do the T account. Okay, so this particular problem was just asking for the investment account, and that will be your answer. That's how you do it. Okay, all right, I'll see you soon for other videos.